June 2019's game plan video of the month. For June, we're taking a look at, as always, revisiting the same exact chart that we look at on a monthly basis to try to give you a few technical updates on which direction we think we're headed from here. If you remember, the B recovery that we discussed last month in May had included this line, which had suggested it would be difficult to break above that, and that we wanted to see some sort of pullback in this area. That actually happened pretty fiercely in May, and a recovery attempt here was giving some hope, but did nothing more than get back to this 50-day moving average line before moving lower to where we've now added a parallel line to what you see up here. Is that going to hold or not? That is the question. In other words, we are now down, but are we out? And I don't think we are, and here's why. If you go back to the yellow that we had put back here for the high that we were unable to exceed, we are still within what I would consider to be a longer term head and shoulders pattern, where here's a shoulder, here's a head, and the potential for another shoulder coming. Does that mean we exceed this green area, this line here? Hopefully not, but that would be a good spot to find a real sustainable bounce higher. We had mentioned that we're in what we would consider to be the second wave of a move off of this bottom. We think we could see that third wave, but what's weighing in the headlines, of course, is the trade tensions. So we do think that this is down but not out, and if we can hold, especially if we were to move lower, as our most recent update had projected a low of around 24.4, then it would be wise to stay invested, rebalance as needed, and potentially look at taking some gains if you're holding bonds, because bonds have really been moving up in the wake of rates coming down. So address your allocation, stick with it. The volatility will stay throughout the summer. Keep following us or call us if you have any questions. Thanks for watching.